Hey everyone, let us talk about money, specifically how I spectacularly messed up with it multiple times. Look, I am not some financial wizard, far from it. I am just a regular guy, 27, now who has learned a lot of tough lessons in the school of hard knocks, also known as the investment market. And today, I want to share some of those painful, but incredibly valuable experiences with you. My goal here is not to tell you what to do, but to show you what not to do. Based on my own blunders, it is like having a friend who has already walked through all the financial minefields and is now pointing out where the traps are. When I was in my early 20s, I had this burning desire to get rich fast. I mean, who does not, right? I saw all these headlines, heard all these whispers about people making fortunes overnight, and my young, impressionable self thought, I can do that too. I thought if I just found the right stock, the right crypto, the right whatever, my problems would vanish. Spoiler alert, they did not. They actually multiplied. My background is pretty ordinary. No silver spoons here, so the money I had I worked hard for, and then in my pursuit of quick wealth, I managed to lose a good chunk of it. It was a brutal awakening, but absolutely necessary. My first big mistake was short-term speculation. I would jump into stocks mostly because I saw them trending, or some self-proclaimed expert on a forum said they were going to the moon. I would buy, watch it go up a little, get greedy, then watch it crash, and panic sell. It was a cycle of hope, greed, fear, and regret. I was not investing, I was gambling. Pure and simple. I remember one time, I put a significant portion of my savings into a stock that everyone was hyping up. The price was soaring, and I thought, this is it, my ticket to early retirement. I bought in at what I thought was a good price, but it just kept going up. I was ecstatic, then suddenly it turned. It plummeted faster than it rose. I held on, hoping it would recover. Telling myself it was just a dip, it was not. I ended up selling at a massive loss, my heart sinking with every dollar that vanished. The feeling of seeing your hard-earned money just evaporate because of your own impatience and lack of knowledge. It is gut-wrenching. Then came the investment scams. Oh, the scams. When you are desperate to make money, you become incredibly vulnerable to anything that promises high returns with little effort. I fell for a few of those. They came in different forms, some disguised as legitimate opportunities, others a bit more obvious in hindsight. But at the time, my judgment was clouded by the allure of easy money. There was one, a particularly slick operation that promised guaranteed daily returns. It involved some complicated explanation about algorithmic trading and exclusive access to markets. It sounded convincing enough to my naive ears. I invested, watched the numbers in my online dashboard grow for a few days. Felt like a genius. Then one morning, the website was gone. Poof, my money, gone with it. The shame, the anger, the feeling of being so utterly foolish, it was almost as painful as the financial loss itself. It taught me a very harsh lesson about due diligence and about the fundamental truth that if it sounds too good to be true, it almost certainly is. Another major pitfall was not understanding risk management and going all in on single investments. This is what they call being over-leveraged or heavily concentrated. My thinking was, if I am confident in this one thing, why diversify? Just put everything into it and the returns will be bigger. What a rookie mistake. I remember putting a huge chunk of my money into one particular cryptocurrency because I believed in the underlying technology and the community behind it. I read all the white papers, watched all the YouTube videos, and convinced myself it was the future. I ignored all the warnings about volatility and market speculation when the crypto market had one of its notorious crashes. That single investment dragged my entire portfolio down with it. There was no safety net, no other assets to cushion the blow. It was a complete disaster. It taught me the crucial importance of diversification, of not putting all your eggs in one basket, no matter how shiny that basket seems. And then there was emotional trading. This one is insidious because it is a constant battle against your own nature. I would see a stock going up, feel the fear of missing out, and jump in without research. Then, when it dipped, I would panic and sell. Locking in my losses, I was constantly chasing highs and running from lows, always reacting, never planning. My decisions were driven by emotion, not logic. My portfolio chart looked like a roller coaster, and my stress levels mirrored it. I realized that the market does not care about your feelings. It is a cold, rational beast, and if you approach it emotionally, you are going to get eaten alive. It was a long journey to learn to detach my emotions from my financial decisions, to understand that market fluctuations are normal, and to stick to a plan rather than reacting impulsively. These experiences, these huge financial setbacks, they were painful. They cost me a lot of the money I had worked so hard to save, but they were also the best teachers I ever had. After hitting rock bottom, I finally realized that my approach was fundamentally flawed. I needed to unlearn all the bad habits and start from scratch. I picked up books, read articles, and listened to credible financial educators, not internet gurus promising the moon. I learned about budgeting, emergency funds, low-cost index funds, and the power of compounding. It was not exciting, it was not flashy, but it was effective. It was about building a strong foundation, brick by painful brick. Now, my financial life looks very different. I am not trying to get rich overnight. I am focused on steady, sustainable growth. My money is now in things like a high yield savings account for my emergency fund and short-term goals. I am consistently contributing to my Roth IRA and 401k, taking advantage of tax benefits and compound interest. These are not exciting investments, but they are reliable. I still have a car loan, but I am chipping away at it responsibly. I have zero credit card debt, which is a huge relief. The biggest change has been my mindset. I have traded the gambler's high for the peace of mind that comes with a solid financial plan. One of the biggest lessons I learned, and something I cannot stress enough for anyone starting out, is the importance of living below your means. When I was younger, I worked full-time making decent money for my age, but instead of spending it all, I lived frugally. I saved a huge portion of my paycheck, sometimes as much as 80%. This was easier then because I lived at home, which I know is a privilege not everyone has. But the principle remains: the more you can save early on, the more capital you have to grow. I automated my savings so the money was moved to a separate account the moment I got paid. I never even saw it, which made it easier not to spend. This habit of automating savings has been a cornerstone of my financial recovery. It removes the decision-making from the equation, making saving effortless and consistent. Building a budget that actually works for you is also crucial. I did not just grab some template off the internet. I sat down, looked at my income, my expenses, and my lifestyle. I figured out what I truly needed to spend and where I could cut back. For me, I do not have expensive hobbies like frequent dining out or partying, so my weekly expenses are relatively low. This allows me to save more. It is about understanding your own financial landscape, not someone else's. Your budget has to be personal, adaptable, and realistic. If it is too restrictive, you will fail. If it is too loose, you will not make progress. It is a constant negotiation with yourself, finding that sweet spot between enjoying life now and securing your future. And then there is the car problem. My personal kryptonite: I used to love modifying cars. I built a Subaru WRX, then a BMW each time. I poured thousands into them, thinking I was creating something amazing. And each time when I sold them, I lost a significant amount of money. Cars, especially modified ones, are rarely good investments. The value depreciates rapidly, and modifications often do not add value, they reduce it. After losing about $10,000 on the Subaru and $15,000 on the BMW, I thought a Tesla would be different. It was not. Lost a bunch on that too. Finally, I swallowed my pride, ate my ego, and bought a simple, practical Jeep. It has the cheapest monthly payment I have had since I was 18, and I love it. More importantly, the money I am saving by not chasing expensive cars, I am now investing. That is a game changer. It is about making sensible choices, even if they are not the flashiest. It is about prioritizing financial goals over fleeting status symbols. I learned that true wealth is not about what you own, but about the freedom and peace of mind your money provides. My journey is far from over. My current financial goal is to hit $100,000 net worth. By the time I am 28, I am 27. Now, so that gives me about a year. It is ambitious but achievable with consistent saving and smart low-risk investing. I am also aiming to max out my Roth IRA every year. These are concrete goals that keep me focused and disciplined. These specific targets help me stay on track, providing clear milestones in my financial journey. Without them, it is easy to drift and lose sight of where you are going. Setting these goals also forces me to regularly review my progress and adjust my strategies as needed. One crucial aspect I have really embraced is the importance of emergency savings after experiencing the pain of sudden losses. Having a financial buffer became paramount. My high-yield savings account now holds a substantial emergency fund, enough to cover several months of living expenses. This fund is not for investing. It is purely for peace of mind and protection against unexpected life events. Knowing it is there allows me to take calculated risks in other areas of my finances without the constant fear of being wiped out by a medical emergency or job loss. It is the bedrock of my financial security, something I wish I had prioritized much earlier. Another lesson learned, perhaps the hardest one, is patience. In my younger days, I was always looking for the fast lane. The express route to wealth. I wanted instant gratification. But the market, and indeed wealth accumulation, rewards patience and consistency. It is a marathon, not a sprint. I have learned to appreciate the slow, steady grind, the small, consistent contributions to my investment accounts, the regular reviews of my budget, the gradual increase in my financial literacy. These seemingly small actions compound over time into significant progress. There are no shortcuts, only smart, consistent effort. This shift in perspective from trying to outsmart the market to simply staying the course has been transformative. I also realized that surrounding myself with the right information and people is critical. I actively seek out content from reputable financial educators and avoid the noise and hype from speculative corners of the internet. I discuss financial goals with trusted friends and mentors who share similar values of long-term planning and responsible financial habits. This community, even if informal, provides support, accountability, and valuable insights, helping me stay away from the temptations of quick riches. It is easy to get swept up in fads if you are isolated, but having a network of Minded individuals helps ground your financial decisions. My early mistakes taught me a profound respect for money, not just its potential to grow, but also its power to disappear if mishandled. It instilled in me a sense of humility about my own financial knowledge and a continuous desire to learn and improve. I no longer view market fluctuations with panic, but as opportunities for patient, long-term investors. I have come to understand that true financial independence is not about a specific number in a bank account, but about having control over your financial life, making informed decisions, and aligning your money with your values. So if you are watching this, whether you are 25, 35, or 45, please know this. You do not need to move fast. You do not need to chase every hot tip or get rich quick scheme. Those are usually traps. What you need is purpose, discipline, and consistency. Save your money, invest it wisely and slowly. Even if you can only save a small percentage of your paycheck right now, start there. The power of compounding over time is incredible. I am not trying to be a millionaire overnight. My goal is to build a solid financial foundation step by step, day by day. If I stick to these habits, the growth will come. It is about building a future where I have options, where I can breathe a little easier, and where I am not constantly worried about money. That is true, financial freedom. Thank you for listening to my stories of financial woe and eventual learning. I hope they help you avoid some of the mistakes I made. Remember, every step forward, no matter how small, is progress. And learning from past mistakes is perhaps the most valuable investment you can make. It is a journey, and we are all on it together.